Last Tuesday, we talked about the violation of the 200-day MA. Tuesday was here. Monday, break below this 200-day MA. There's a effort versus results going on here for these two bar. Let's zoom in a little bit here. Bar 1, bar 2. Bar 1 is Monday, bar 2 last Tuesday. Each of these bar contains a similar volume. In fact, bar 2 has slightly more volume, but the progress to the downside for bar 1 is from here to the close. That's the progress to the downside, but bar 2 is from here to here. That's a progress to the downside for bar 2. Is not even one half of the progress of the downside in bar 1, but the volume is similar. Suggests that there is demand rush in this bar. That's why stop the price from going down. A lot of the effort behind to push a price down, but it moved a little bit. We call this a stopping action. What we want to see is a confirmation bar. Means we want the aggressive demand to come in the next bar. Do we get that? Not really, not the aggressive, slightly lower. And what's the results? The results is disappointing. This is a long rejection tail, suggesting that the bear is still in control. We know that the quality demand is not there yet. There's another continuation of the downtrend, but this case, it's not that great in terms of the progress to the downside. Supply has been decreasing slightly. We still want to wait for quality demand. Next bar is one of the best bullish bar that we have, up about 2%. That's by far the best rally out from this downswing. But compared to all this bearish bar, this is still relatively weak. This one bar alone is weak. And here we have also not so aggressive demand. We still want to see a follow through to the upside. Last Tuesday, we also mentioned that we want to see a commit above this high of this bar. It means it want to have something like this to commit above. It could kickstart the rally and eventually to test the obvious level, the axis level at about 58.50, 58.70, or even to about 59 or even 6,000. However, a lot of the overhead resistance here is the first level that you need to come above, about 57.50. If it failed to even touch this or even come in above this high, the high of this bar, 57.50, chances for it go down and has a lower low test or even go back to the obvious support level at 53 to about 52. That's the first level that I want to see it come in above. Otherwise, here is the next target, 5200 to about 5300. That is a relief rally that's still unfolding. The key level is 57.50. We want to see a commitment above this bar. They could gain some momentum to charge it to about 58.60 to even 6,000. We need to monitor whether we'll have excessive supply coming up at this key level, because a lot of the people are also paying attention to the important levels. They also want to sell into strength, whether it's to do some short covering, taking profits, or whether it is to cut some losses if they didn't sell on the way down. A lot of traders, investors, they're paying attention to 200-day MA. Here is the overhead resistance at about 57. Here we have the 200-day MA as a resistance level, and also the classical horizontal resistance level that you need to overcome, because that is the commitment bar to the downside. At this point, I do not want to bet on the long term or even multiple swing. Even if we want to long some position in the outperforming stocks, we also want to be quick and be nimble, that when the tide turns, we could unload the position quickly or lock in a profit quickly. That's why this is a bet on a short-term bounce together with the index when we betting or buying the outperforming stocks. Even though a lot of the outperforming stocks, They are coming out from a base, typical textbook structure, going back up. But bear in mind that if this kind of the bearish condition keep unfolding, that is likely going to take time to repair. A lot of the breakout and a lot of the structure, bullish structure, will end up as failure. It's a matter of time, one group by one group, one stock by one stock. That's what happened during bear markets, but there's still early stage. This is not looking that optimistic. What we have here is a sign of weakness. We have a topping formation, sign of weakness with an increasing of the supply. We also break down or violate the up channels. If we draw up channel here, suddenly this is violating the up channel. Here is the up channel that we have, and this is a breakdown of this up channel. Once it's breakdown from the up channel, then it suddenly violate this structure, suggesting the uptrend from this up channel coming to an end, at least going into a trading range. That's not bad. If not, go into a reversal mode. That's why I mentioned that if we fail at any point, 5200 to about 5300 is a much more meaningful target. Nikki say, what's the chance of testing 50? Well, if you look at this, a violation of this channel suggests the break of the up channel uptrend to where here is the initial point of the up channel. Under a bearish condition, could go all the way and to wipe out this whole up channel. Means it could drop to 5,000. That's under the very bearish condition. But because this is quite an extensive down move, and if we get a lower high form, whether it's right at the 200-day MA or whether we get it at about 5850 or even close to 6,000, it's still a lower high. Then we could have another leg down. Let's use 5800. If we go up, go to here and test it to 200-day MA 5800, somewhere around here, we use some form of the simple projection, something like this, bear flag, because what it's doing now is building up a flag, whether it's in a this kind of the flag formation or whether it's a wedge formation. It doesn't matter. We could still using this kind of the projection one-to-one from this flagpole head up to another here as another destination as a target is also about 5200. Judging by the volatility of the current price action, there is increasing of the supply level, which still need to be tested. We have a relief rally at the moment, but not sure how good it is or how strong it is. The next move to the downside will be important. If we have decreasing of the supply, or the other thing that we could adopt is the seasonality, because we are nearing the end of the March. April is coming. From a seasonality point of view, starting onwards from April, we should see an upswing. Probably here's a low, and we could see another higher low form here. Either way, the probability for it to hit 5200 is still there, still quite high. Let's compare these two downswing. Here is a downswing. Here is a downswing. For downswing one, the first downswing, we have a two-legged swing. We have A, B, and C. Here is almost like one straight line. That is the difference in the structure. So there is a time to rally. Demand is still present, and demand is especially obvious when it hits 5200. There's a previous support zone. How do we define the demand? Although these three bars are fast and also contain excessive supply and also a lot of the gap down, but here we have strong demand. A lot at or this portion right here is the demand. There is demand right there buying when it's dropping. Here is a strong bounce. We want to see this kind of the demand jump in. Here, downswing 2, what we have is almost like continuously going down every day. Even if we have an attempt to rally in some other days, here we do not have any follow through to the upside. Immediately it reverse and get wiped out. Here we have decent rally show up. Also during this, there's a short-term climax. But here, what we have is decreasing of the supply, yet to attract the aggressive demand. Here we have quality demand, aggressive demand, because the buyers recognize this as oversold and they see the value, they jump in. Here, the market is very over. The short seller need to take some profit out. Supply has been decreasing. However, where is the aggressive demand? Not yet appearing. The only demand that we have on Friday, Monday is not that aggressive. That's the difference. That's why if we base on this kind of the analog, this rally that's unfolding is likely to be weaker than 1. Rally 2 is likely to be weaker than rally 1. I would speculate for a lower low test, means whenever you track the selling, attract the supply at some resistance level, it will resume this selling and then go to the lower low. What's the next meaningful level? In 52 to 53 will be a good zone, depend on how much supply that it could attract. Based on this, there is also a higher chance for it to hit that. And last Tuesday, we also talked about we yet to see a capitulation move. We are still to see another strong move to the downside where everyone throwing the tower. We could have some more room to go down.